It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already Monday evening, June 27th, 2016, squeezing out the last few drops of this amazing month of June. Our favorite futures markets are reacting to last week's Brexit vote with some choppy price action this evening, but our plan is to turn off the news media and turn on the charts and let the technical clues be our guide for tomorrow. Crude oil, S&P, and Euro are all bearish, while the gold is bullish going into Tuesday's session. Got a great newsletter in store for you guys and gals. Before we jump into our video and start making some sense of the craziness, the post-Brexit mayhem, and get ready for tomorrow's session, I do want to remind you the only place to watch the full-length version of this newsletter video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link. Come join me here on the blog for the full-length version. While you're here, don't forget to grab a free pass. Come out and join me in the trade room as a guest, right? If you're not a member here at School of Trade, grab your free pass in the upper left-hand corner. Don't forget to register for the mailing list. Lower left-hand corner, name and email address. I'm going to send you a verification email, a welcome email, and then I'll send you an email every evening when the nightly newsletter is ready to be watched. Right below tonight's video, you can download all the charts I'm using in tonight's video. How easy is that? Have those charts ready for your trading tomorrow, wherever you may be. And of course, don't forget, I'll encourage you guys to learn the who, what, where, when, and why. Everything that it is being a student here at School of Trade. Check out the trial membership on the right-hand side of the website. And you know I'm always standing by 24/7, 365 to give you guys a hand if you have any questions. Boy, oh boy, what a busy, busy day. Well, I'll tell you right now, though, I will highly encourage you to turn off the television, turn off the news media right now. I was just talking to some of our clients this afternoon in the chat room about this, saying, you turn on the television right now, go to any news media website, I don't care what it is, they're painting the doomsday scenario right now. And you know, usually when you see everybody pointing in that direction, it smells like a great time to be a buyer. Now, I don't recommend trying to pick the bottom here just yet, but I do recommend, though, that you, again, turn off the news media, turn off all the fear-mongering, because remember, all those guys and gals out there in the news media, all they're trying to do is sell you advertising. They're trying to get you to pay attention. We're going to turn off the news media because the charts are going to be the most reliable right now. They're a little bit choppy here tonight. I'm going to tell you that right heads up here. We get a real choppy scenario here going into tomorrow, so we're going to keep our head on a swivel. We're going to stay patient. We're going to be conservative. Remember, there's no need to be a hero right now. There's no need to be a hero right now. These are the times that wring out all of the rookie and retail traders out of the market. If you can survive the next, again, late last week we talked about this, into this week. If you can stay patient, keep your head on straight, follow the plan. I'll give you that plan, obviously, here at School of Trade. We'll do it together tomorrow with our students at 8 o'clock Eastern Time. But keep it simple going forward. Survive this week, and you'll be rewarded because you know this coil is just winding up tight. I'm extremely optimistic for the future. I think, like I always say, I believe in the human spirit. I believe in a free economy. I believe that we're going to make a very bright future ahead of us here. We just got to survive a little bit of thunderstorms right around the time when things change. Change is always going to be choppy, but we got a good plan, and we're going to execute that plan tomorrow. I hope to see you guys there with me. Now, looking at the news here for tonight, we'll look at the news tonight, tomorrow, and then we'll go into looking at some charts here tonight. Of course, tomorrow is Tuesday, June 28th. Just a heads up, we do have a couple things out the gate here today. Later on this week, we've got non-farm payrolls, the 1st of July, and then we're going into the 4th of July, right, the Independence Day holiday weekend, right? So this is going to be a really important week, right? We got non-farms, which you'll see, got to scroll down a little bit further here. Non-farms at 8:30, wherever that is. Are they doing this next week? Here, let me double check. Let's go into July here. They should be doing non-farms on Friday, but the first day is a Friday, right? They're not. They're going to make us wait here until next week. Yes, okay, so non-farms are not this Friday. Remember, the first day of the month, if it happens to be a Friday, they put non-farms back another Friday. So as it stands right now, we don't have non-farm Friday around the corner. That'll be next Friday. I'm glad I checked that calendar. Really important though, let's make sure we're ready here now for the last few drops of this month of June. So no non-farm Friday on July 1st. First day of the month of Friday, they'll push it back to next Friday. And of course, again, we have the 4th of July holiday weekend coming right around the corner. We'll talk more about that as we get there. No major news on the schedule here for tonight out of Asia, Australia. The break in the action, right, from our good friends in the Asian markets. And of course, moving on to Tuesday, June 28th, we're looking at the GDP number tomorrow morning at 8:30. We've got the Case-Shiller here at 9 a.m., consumer prices at 10 a.m., and then that's pretty much it tomorrow for the major news. So no major news tonight coming out of Asia and Australia. We go tomorrow morning, GDP at 8:30 a.m., and then, of course, some minor news here. The Case-Shiller home prices at 9 o'clock and the consumer confidence at 10 a.m. So big week ahead of us, last full week of the month of June. You know, the last part of the day, the last part of the week, the last part of the month, right? End of the week, end of the month, end of the quarter. Always a time where we see more volatility. And with the Brexit vote last week, right, I have no reason to think that this won't be any different, right? So we know to expect some big moves here going into this week here. Again, no non-farm Friday this week. It's the first Friday of the month. It is, the first day of the month is a Friday. They pushed that back till next Friday. So we are clear sailing here Tuesday, Wednesday, Thursday, and Friday. Friday will be a half day. We'll talk about that as we go forward into the 4th of July weekend. Major news tomorrow morning, 8:30 a.m. GDP. That's really the only major news of the entire session tomorrow as we continue to see this kind of workout, right, of this Brexit vote. Now, let's get to the real stuff here. Look at those charts for tomorrow's session. Crude oil is bearish and testing the highs of the channel this evening. Sellers had control for the majority of the session today, but after reaching their double down target, we see a strong bullish reaction off the lows, which we assume will have more buyers interested on the next pullback to the moving average. Buyers will be looking for enough room to buy the next pullback without buying into those channel highs, or they need to wait for a breakout pullback above the channel highs on the way to the next swing at 46.90. Now, sellers will be looking for the buyers to fail on this next pullback off the highs, but we assume that most of the reliable selling opportunities will be up above that 46.90 area for a trap high and then back down to those lows. Really right now, just to kind of sum this thing up here, you can definitely see, and this is a very common scenario here, we have this bunch of trap highs right now. This is, and again, you have to remember, this is the Monday after the Brexit vote. It's going to be a little bit rocky as traders are forced. Obviously, we are short-term traders, so we're not forced to be getting in and out of long-term positions. But for the rest of those long-term traders out there, they're being forced to make some very, very difficult decisions right now. And so that's leading into that Monday, Sunday night, Monday morning kind of chop and swap that we saw that started off the day. It got a little bit easier as the day began, but you're going to see some very, very strange charts here. We really don't, I have to say, tonight was one of the most challenging that I've had to work through in probably all of 2016, the last week and into today. So these have definitely not been easy markets. That's why I always recommend you guys don't do it alone. Come see me tomorrow in the trade room. We'll work on it together, right? And we'll put the plan together and trade the plan together tomorrow morning in our trade room. Sellers had controlled pretty much the entire session with the exception of that trapped high, right? And then of course breaking down. You might call this a bear spiking channel, right? If that is going to be your bear spiking channel, then we know look for that trap high right now. But really all we can work on it right now is a bear channel. We know that we have that strong move up for the buyers right now, and that strong move off those lows for the buyers tells us we're probably going to get a pullback here. Buyers are probably going to want to buy that next pullback back to the moving average. The bulls have some trouble here, though. They need to make sure they're buying without buying into the high of that channel. It's either that or they need to wait for the breakout pullback, use the top of that channel on the way up to where we assume we're going to have more sellers waiting to bring this price right back down to those lows. So again, strong bull move up to the high of what is kind of a pathetic bear channel. That strong move definitely tells me that I would expect buyers to come in and buy this next pullback. Their hard part's going to be buying into that channel high. They want to get that breakout pullback for the most reliable. Sellers are going to be looking for those buyers to fail and for a move back down to that double down. This is your classic example. We achieved the objective double down. Look for that two-legged correction before we get the move back down again. This is your typical, market achieves its objective. Sellers take their profit. Buyers jump in. We get that strong push off those lows. It's a pretty strong short covering rally at the end of the day. Again, I expect those buyers to want to buy that pullback. They got to make sure they have enough room, right, to buy without buying into that resistance. If they can't, break out, pull back, use the top of that channel, right, for the next move higher. Then the real struggle comes once we get up above this 46.90. You have to assume when the market, look left, it's clearly bearish. We have to assume when we look at a chart like this, there are going to be what we call swing sellers waiting, right? They will be waiting above these highs up here. And as this price goes higher, as soon as the buyers start to stumble, they'll be waiting to send this price right back down. So for the bulls out there, they've really got to hold this pullback and stay above that 46.90. If they can get it done, then we know that high of day right below the 48 even is likely going to be within focus. Don't forget though, the sellers are going to be looking for really two important places here if you're a seller right now on crude. Obviously, the best one's going to be up top here, buyer failure and then back down. The more short term will be if these buyers can't keep this together, we'll be looking for this price to revisit those lows. What I think most buyers will be looking for and sellers will be reacting to is how far does this pullback go? Does the pullback just happen a little bit here and it gets bought up immediately? That's not going to give the buyers much trouble, right? Then they'll know they can buy that next pullback and they're good to go. But if it pulls back real deep here now there's not a lot of room to get into that trade before we run into that high of the channel. That's where the sellers are going to be drooling over buyers getting stuck, right? And then eventually, if they get stuck and they give up on this, it'll make for easy pickings for those sellers to bring this price right back down to fill that double down target. I think it all comes down to what happens in the overnight session here in the next few hours. Do we get a real strong push up and then hold above that channel high? That will give the buyers more breathing room to go up to that 46.90. Can they hold above it and make that move to 48? Or are we going to see them fail here and right back down? Or possibly a combination of both. Break out, pull back, up, give a little short-term target for the buyers, and then long-term sellers take it right back down. You know me. I'm going to let the charts do the talking on this one, and I'll be seeing what it looks like. We'll open up our trade room tomorrow morning with our students, and we'll do it all together. Crude looking pretty good here right now. Pretty good. I think I saved the best for first here tonight because as we go closer to the gold and the euro, you'll see they're going to get a little bit choppier here as we go through the rest of these charts. How about the S&P? S&P is also bearish and trading inside a range this evening. Sellers had control for the majority of the session today, and after reaching the measured move target, it appears the bears are still hunting for the double down at 1978 and the triple measured move at 1974 3/4. The bears need to be careful right now because they're at the low of the trading range, and the most recent lower low, right, that most recent move lower has significant signs of exhaustion, with each candle getting larger into the closing bell this evening. The best place to be a seller will be back at the range high or resistance levels above the range high, or the next best option if you're a bear will be a breakout pullback to new lows as long as there's enough room to the double down support at 1978. The bulls clearly have been buying this move lower. Just look at those large wicks on the bottom of the candlesticks as it pulled back, and they will be looking for sellers to get caught chasing at these lows as well as at support levels right below that low. As you can see here, buyers coming in right now and reacting to the low of this channel. This is a very simple situation. We look at this chart, another example of a beautiful trap high, right? Beautiful trap high. And originally, you probably think it's a bullish move, but no. It apparently was nothing more than a great price for those sellers to get short in the Asian session, leading into, of course, London and then into the opening bell of the U.S. session. Looks a lot like crude oil. It's a real ugly channel.